Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
All right, so it's Monday, April 7th, 2025. And, we always like to start by kind of getting a sense of what's happening, around the country, around the world. So some quick updates for you guys.
Yeah, definitely.
First off, Ohio and the mid-Mississippi Valley, still dealing with that flooding. Really a tough situation there, and unfortunately, it looks like it's going to continue to be a problem.
Yeah, I saw that on the news this morning, too. Pretty rough.
Yeah. And down south, things are a little bit different. Southeast Virginia down to the east central Gulf Coast, you're going to want to be ready for some potentially severe weather. Heavy rainfall is expected. So just keep an eye on those forecasts.
Yeah, stay safe out there.
Absolutely. Meanwhile, if you're in Central Florida, different story altogether. Very warm, very dry conditions. And because of that, they're talking about elevated fire weather concerns. So be extra cautious if you're in that area.
Makes sense.
Up north, the Great Lakes and the Northeast, well, they're still in winter mode, I guess you could say. They're expecting those winter conditions to stick around through Tuesday. And for a lot of the East Coast, get ready for a bit of a temperature drop. We're going to see some much colder temperatures heading into the middle of the week. And lastly, out west, things are a bit unsettled in the Northwest. So, yeah, it's a bit of a mixed bag of weather across the country today.
Definitely a reminder to check that local forecast before you head out the door.
For sure. Now, let's pivot a little bit and see what's happening in the markets.
All right, let's do it.
The Dow Jones Industrial Average, it closed today at 37274.15, which is a drop of 2.72%. So pretty noticeable decline there.
Yeah.
And the S&P 500, it followed a similar trend, finishing at 4951.93, down by 2.41%.
Okay, so both showing some significant movement downward.
Yeah, definitely. Definitely suggests that, there might be some concerns, some underlying worries kind of driving those market shifts.
Absolutely. And that actually brings us nicely to our main focus today, wouldn't you say?
It really does. And here at Snarful Solutions Group, we're calling this segment Connecting the Dots. Because, sometimes things happen in the world, in the news, and they might seem kind of separate at first glance. But when you really take a closer look, you start to see those connections. So we've got 3 big tech news stories that broke today. And we're going to do our best to unpack what they mean, not just for the tech world, but for you, for your everyday life.
I like that, connecting the dots. So what's the first dot we're going to connect today?
All right, so the first one, and this is a big one, is U.S. tech stocks. They've been taking a real beating lately. Today was the 3rd consecutive trading session where we've seen a significant sell-off as markets opened.
3rd day in a row. Wow.
Yeah. So the biggest names in tech, they're seeing their stock prices drop pretty dramatically. Apple, Nvidia, Tesla, they all fell by at least 6%, maybe even more.
Oof, 6% or more. That's rough.
Yeah, it's not good. Meta and Amazon, they were down by over 3%. And even the giants, Microsoft and Alphabet, they experienced declines of over 1%. So it's a pretty broad sell-off across the tech sector.
It sounds pretty widespread. So what's going on? Why is all of this happening?
Well, to really understand what's going on now, you have to kind of look back at what happened late last week. So you remember the so-called Magnificent Seven stocks?
I do. Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, and Meta, right?
That's right, those 7 companies.
Yeah.
Well, they have collectively lost, get this, $1.8 trillion in market value. And this has all happened over just the last 2 trading sessions. That's a massive amount of money to lose in such a short period of time.
$1.8 trillion. That's a hard number to even wrap your head around.
It is. These 7 companies, they've really been the powerhouses behind a lot of the market growth we've seen. So when you see this kind of a drop, this kind of a shift, it really signals that something's happening, that investor sentiment is changing.
Yeah, it definitely raises some red flags. So what's behind this sudden shift in sentiment? Any ideas?
Well, if you look at a lot of the analysis, the reports we're seeing, it seems like the main culprit is fear. Fear of a global trade war. And this fear, it really started to take hold last Wednesday after President Trump went ahead and implemented a pretty aggressive tariff plan.
Ah, okay. So the market's basically reacting to that uncertainty, that potential disruption to international trade.
Exactly. And it's not just about the immediate impact. I think there's a bigger concern about what this could mean for the overall economy.
Yeah.
Like, could this lead to a recession? These are the kinds of questions that investors are grappling with, and it's making them very, very cautious.
I see. So it's that fear factor, the potential for things to spiral, that's driving the sell-off. Makes sense.
It does. And, it's interesting because you can really see how this is playing out when you look at the numbers for some of these individual companies.
Yeah.
Like take Apple, for example.
Mm-hmm.
Over the last 2 trading sessions, they've seen over $533 billion of their market capitalization, which is basically just the total value of all their outstanding shares just vanish.
Wow.
Yeah. And Thursday was particularly bad for them. It was their worst single-day drop in 5 years. And a lot of analysts are directly linking this to the tariffs, specifically the ones targeting Apple's secondary manufacturing locations.
Yeah.
The ones that are outside of China.
So it really highlights how globalized these companies are, how interconnected those supply chains have become.
It really does. And it's not just Apple, of course. The Nasdaq, which is really heavily weighted towards tech companies, well, it had its worst week since March of 2020.
Remember what was happening back then?
Yeah, the beginning of the pandemic lockdowns,
Yeah.
lots of uncertainty and volatility in the markets.
Exactly. And on Thursday alone, just Thursday, the Magnificent Seven, those 7 companies, they lost over $1 trillion in combined market value, just in one day.
That's insane.
Yeah, it is. It really gives you a sense of just how much concern there is out there. No kidding. And you mentioned Tesla earlier. They seem to be a company that's always prone to some pretty big swings. So how did they fare in all of this?
Well, actually, they were the biggest loser percentage-wise in that Magnificent Seven group. On Friday, their stock plunged by over 10%. And over the last 2 days, they've lost a total of over $139 billion in market cap.
Wow, 10% in one day. That's a huge drop.
It is. And then you've got NVIDIA, another major tech player with a lot of global operations. They lost a combined $393 billion over those 2 trading sessions. These are companies that have seen massive growth in recent years, so to see them decline so sharply is definitely a sign that something's up.
Yeah, no doubt about it. And what about Meta and Amazon? They're kind of the poster children for the digital economy, so how have they been impacted?
Well, Meta's market value has taken a significant hit. It's dropped by over $200 billion in the last 2 days. And Amazon, their losses are even bigger, $265 billion. And get this, Friday was actually their 9th consecutive week of losses. That's their worst streak since 2008, back during the financial crisis.
9th straight week? That's pretty telling.
It is. And even though Alphabet and Microsoft didn't experience quite as dramatic percentage drops as some of the others, they're still talking about significant amounts of money lost. Alphabet shed over $139 billion, and Microsoft lost $165 billion. All in just those last 2 days.
So it seems like this downturn is affecting pretty much everyone in the tech sector, from the biggest players to those that are maybe a little bit smaller.
You're absolutely right. This isn't just limited to those mega caps. We've seen other tech companies like Oracle, AppLovin, Palantir Technologies, Salesforce, they've all experienced pretty notable declines this week. And one of the industries that's been hit particularly hard is the semiconductor industry.
Semiconductors. That's interesting. Why them specifically?
Well, semiconductors are essential components for so many things these days. Smartphones, computers, cars, even household appliances. They're everywhere. And a lot of these semiconductor companies, they rely on really complex global supply chains. A lot of their production happens overseas. So when you have these tariffs and this talk of a potential trade war, it creates a lot of uncertainty for them.
So it's like a double whammy. They're worried about the tariffs themselves, but also about what a broader economic slowdown could mean for demand for their products.
Exactly. And to get a sense of how concerned the market is about semiconductors, you just have to look at the VanEck Semiconductor ETF. That's an exchange-traded fund, basically a basket of stocks that cracks a particular sector. Well, the VanEck Semiconductor ETF has plunged by about 15% this week.
15%? Wow, that's a pretty steep drop.
It is. And if you look at some of the individual companies, you'll see a similar story. Marvell Technology and Qorvo, which is a major supplier for Apple, their share prices dropped by about 20%. Advanced Micro Devices down almost 17%. And the big players, Intel and Broadcom, they both fell by more than 12%. And then you've got Micron Technology, which is a big name in memory chips. Just on Friday alone, they lost about 13% of their value, which means they've lost more than a quarter of their value in just this week.
So the semiconductor industry is really feeling the heat right now.
Yeah, definitely. It's a tough time to be in that space. And, it's not just the numbers, the market movements that are concerning. You're also starting to hear some pretty strong warnings from industry experts.
Like who?
Right.
What are they saying?
Well, there's Dan Ives, for example. He's an analyst over at Wedbush Securities. And he's actually using pretty strong language. He's talking about a potential economic Armageddon for the tech sector if these tariffs aren't rolled back. He's even saying that this could set the U.S. tech industry back by a decade.
Economic Armageddon. That's pretty dramatic.
It is, but he's not alone in his concerns. You've got Bill Ackman, the hedge fund investor. Now, he actually supported President Trump's 2024 campaign.
Okay, so he's not exactly coming from a position of opposition.
Right. But even Ackman is now saying that if this trade war continues, it could lead to a self-induced economic nuclear winter.
Economic nuclear winter. That's quite an image.
It is. And it just shows you that these concerns are coming from all sides. And then there's JP Morgan. Their analysts, they're predicting that all of this could have some real-world consequences. They're saying that unemployment could rise to 5.3% and that the U.S. economy could actually start to contract. They're also worried about inflation, saying that higher prices could hit consumers even harder than they did during that post-pandemic spike we saw.
So it's not just Wall Street that's worried. They're talking about real-world Main Street impacts.
Absolutely.
Yeah.
And even Jamie Dimon, the CEO of JP Morgan, he's weighed in on this. He's not usually one to get involved in these kinds of policy debates, but he's actually urging for a quick resolution to this tariff standoff. He's saying that if this drags on, it could lead to some serious inflationary pressures.
So even from within the financial sector, there's a sense of urgency, a feeling that this needs to be addressed.
Definitely. So, we've been talking about these market movements, these big numbers, these predictions from experts. But I think it's important to step back and think about what all of this means for the average person. Like, how could this potentially impact you, your family, your finances?
That's a great point. It can be easy to get lost in the abstract when you're talking about things like the stock market and global trade.
Yeah.
But this stuff does have real-world implications.
It absolutely does. So first off, if you have any investments, whether it's a retirement account, a brokerage account, whatever it might be, this market downturn could affect you directly. If the market continues to decline, your investments could lose value, and that means lower returns.
Yeah, that's something everyone needs to be aware of.
And then there's the whole issue of a potential recession. If the economy does start to slow down, it could lead to job losses, reduced consumer spending, all sorts of things that could impact your day-to-day life.
Right. It's that ripple effect.
Exactly. And finally, you have to think about what this could mean for the prices of things you buy. If tech companies have to pay more for components because of tariffs, they might have to raise prices on their products, so you could end up paying more for your next smartphone, your next computer, even your next car.
So the potential consequences are pretty wide-ranging.
They are. It's something we're definitely going to keep our eye on and keep you updated on as things develop. Okay, so that was our first story. Now let's move on to the second one, which actually builds on a lot of what we were just talking about, but it kind of expands the scope.
All right, so broadening the horizon a bit. What's next?
So the second big story today is about global chip stocks. They've also been taking a tumble, pretty much mirroring what we've seen happening here in the U.S. It's a continuation of those losses we saw last week.
Okay, so it's not just a U.S. phenomenon.
Nope, it's global.
Yep.
And we're talking about some big names here. NVIDIA, Intel, ASML, SK Hynix, Infineon, ST Micronepo. They've all seen their stock prices decline.
So it's a similar story to what we saw with U.S. tech stocks, those concerns about tariffs, and the global economic outlook.
Exactly the same. Those are the two big factors driving this downturn. And, it's interesting because the reaction in other markets around the world has been pretty strong as well. In Asia, markets were hit particularly hard. Hong Kong's market was down 13%, Taiwan's down 10%, and mainland China's down 7%.
Those are significant drops.
Yeah, they are. And Europe wasn't spared either. The Pan-European Index, it fell by over 5%. So it's a pretty clear sign that this isn't just a localized issue. There's a lot of concern around the world about where things are headed.
Absolutely. And, one thing that caught my eye was that the S&P 500, it actually entered bear market territory today, didn't it?
It did. That's a pretty significant development. So the S&P 500 opened sharply lower, down by about 3%. It ended up finishing the day down 4%. And that means it's officially crossed that threshold into what's considered a bear market, which is defined as a sustained decline of 20% or more from its recent high point.
Okay, so that's not good.
Not really. And to put that in perspective, the S&P 500 is now 17.4% lower than where it was back in February at its peak.
A bear market often signals a shift in investor confidence, maybe even fear about where the economy is going.
It definitely does. And, the tech-heavy Nasdaq, it also had a rough day, dropping over 4.5%. And the Dow Jones Industrial Average, it fell by 3.78%, which is a loss of about 1,200 points. So, yeah, not a great day for the markets.
No, not at all. And, it's important to understand that the current market turmoil isn't just about tariffs in general. It's really about the scale and the specific nature of President Trump's proposals.
That's a really important point. It's not just about a few targeted tariffs here and there. This is about a much more fundamental shift in thinking. What President Trump seems to be aiming for is a complete overhaul of the global free trade system that's been in place for decades. He wants to bring manufacturing back to the U.S., make the country more export-oriented. It's a really big change, a big gamble.
And one that many experts are warning could have some pretty serious consequences.
Absolutely. Economists, business leaders, they're all saying that trying to implement this kind of transformation could be incredibly costly. And it's not just about money. There's a real concern that this could lead to a lower standard of living for many Americans.
How so?
Well, if you want to make American manufacturing competitive on a global scale, you're probably going to have to keep wages lower. And that means less money in the pockets of American workers.
So it's a trade-off. Trying to revitalize one sector of the economy could have negative consequences for others.
Exactly. And it's not clear that the benefits would outweigh the costs.
And how has President Trump responded to all of this, to the market turmoil, to the concerns being raised by experts?
Well, despite the market reaction, despite the warnings, he seems to be pretty determined to stick with his plan. He's actually been pointing to the falling oil and food prices, the declining interest rates, as evidence that his approach is working.
But as we mentioned earlier, most economists see those as signs of a weakening economy, not a strong one.
Exactly. They're not signs of success, they're signs of trouble. But President Trump doesn't seem to see it that way. He's still very much focused on this idea of China taking advantage of the U.S., and he's blaming previous administrations for not being tough enough on trade.
So there's a real disconnect there between his perspective and the perspective of many in the business and economic world.
A huge disconnect. You know, it's not just economists and business leaders who are expressing concerns. Even Elon Musk, the CEO of Tesla and SpaceX, has spoken out against the tariffs.
Elon Musk, that's interesting.
Yeah, he's been pretty vocal about it. He's pointed out how interconnected global supply chains are and how trying to unravel them through tariffs is likely to be very disruptive and damaging. And, you know, both Tesla and SpaceX, they've warned in the past that tariffs could hurt their businesses, increase their costs.
So it's not just theoretical for him. He's seeing the potential impact firsthand.
Exactly. And China's not just sitting back and taking all of this either. They've announced that they're going to impose a 34% tariff on all goods imported from the U.S.
34%? That's a pretty significant retaliation.
It is. And this comes right after the U.S. increased tariffs on Chinese goods. So it's a tit-for-tat escalation of this trade war. And, you know, almost everyone agrees, economists, business leaders, they all say that these tariffs are a bad idea, that they're going to hurt the global economy.
So it's not a partisan issue. There's pretty widespread agreement on this.
Yeah, it's pretty rare to see that kind of consensus. But on this issue, there really is. Okay, so we've talked about these global chip stock drops, the broader economic concerns. But what does all of this mean for you, for your everyday life?
That's the key question, isn't it?
It is. So first off, if the global economy does slow down, it could affect things like job security and how much people are spending. That could have an impact on you, your family, your community.
Right. It's all interconnected.
And then, when it comes specifically to chip stocks, you have to remember that semiconductors are in pretty much everything these days. Smartphones, computers, cars, appliances, you name it, it probably has a chip in it. So if the chip market is disrupted, if prices go up because of tariffs or trade wars, you could end up paying more for a lot of the things you buy.
So it could hit consumers right in the wallet.
It could. And it's not just about price increases either. We could actually see shortages of some products if the supply chain is disrupted enough.
Okay, so something to keep an eye on for sure.
Definitely. Okay, so that was our second story. Now for our third and final story today, we're going to shift gears a bit. We've been talking about a lot of heavy stuff, so this one's a little bit lighter, a little bit more fun.
All right, I'm ready for some good news.
Well, this good news comes from the box office. A Minecraft movie, it just had a record-breaking opening weekend here in the U.S. It brought in $157 million.
$157 million. Wow, that's incredible.
Yeah, it's a huge number. It's the biggest domestic debut of any movie so far this year. And get this, it's the best opening weekend ever for a movie based on a video game.
Really? That's impressive. It even beat the Super Mario Bros. Movie.
It did. That movie had a $146 million opening, which was already a big number, but Minecraft managed to top it.
So it's safe to say that people are pretty excited about this movie.
Yeah, they definitely are. And it wasn't just a domestic success either. Internationally, it brought in another $144 million, which means it made a total of $301 million worldwide in its opening weekend.
So a global phenomenon.
Yeah, you could say that. And it's already the fourth biggest movie of the year domestically, and we're not even halfway through 2025 yet.
That's pretty wild. For a long time, movies based on video games didn't have a great track record. They often flopped at the box office and got terrible reviews. But lately, it seems like things are changing.
Yeah, you're right. We've seen some successful video game adaptations in recent years. The Sonic the Hedgehog movies did really well, and the Super Mario Bros. Movie was a big hit too. I think studios are finally figuring out how to make these movies work.
And maybe audiences are more open to them now, too.
I think so. It's definitely a trend to watch. So, with Minecraft, it's interesting because critics haven't been that impressed. It's got a 52% rating on Rotten Tomatoes, which isn't great.
Okay, so the critics aren't loving it.
Nope. But audiences are loving it. They've given it an 87% audience score on Rotten Tomatoes and a B+ cinema score.
So there's a bit of a disconnect there between what the critics are saying and what audiences are saying.
A big disconnect. And that's not unusual for video game adaptations. The movie Warcraft is another example. Critics hated it, but audiences seem to enjoy it.
So what's the secret? Why are audiences responding so positively to Minecraft when the critics aren't as enthusiastic?
Well, I think part of it is the marketing. They did a really clever job of marketing this movie. They partnered with companies like McDonald's. They had a special nether flame sauce that tied into the game. It just generated a lot of buzz and excitement.
So they tapped into that existing fan base and really got people talking.
Exactly. And I think the movie itself just captures the spirit of the game. It's fun, it's creative, it's something that fans can connect with.
It makes sense. And, this success is being seen as a good sign for the box office in general. It's been a bit of a slow year so far, with some movies underperforming.
Yeah, Minecraft is a much-needed win for Hollywood, and it also shows that there's still a big appetite for movies based on video games.
So what's next? Any other big video game adaptations on the horizon?
Oh, there are a bunch. There's a Legend of Zelda movie in development, a Sims movie, and a sequel to the Super Mario Bros. Movie is already in the works.
Wow, so the video game movie trend is definitely here to stay.
It looks like it. And, it's not just about movies either. There are a lot of video game TV shows in development as well. So it's a really exciting time to be a fan of video games.
It is. And, the success of a Minecraft movie, it really speaks to the power and the cultural impact of video games.
Absolutely. Video games aren't just a niche hobby anymore. They're a mainstream form of entertainment.
Yeah.
And the fact that a movie based on a video game can break box office records, it just shows how far the industry has come.
It's amazing, and it's a reminder that entertainment is subjective. What critics might not like, audiences might love, and that's okay.
It is. It's all about finding what you enjoy. Okay, so that was our third and final story for today. So just to quickly recap what we covered, we started by looking at the big sell-off in U.S. tech stocks, which was driven by fears of a global trade war sparked by those new tariffs. Then we saw how those concerns were affecting chip stocks around the world and how the broader market was reacting, with the S&P 500 entering bear market territory. And finally, we ended on a positive note with the record-breaking success of a Minecraft movie, which shows the continuing power and influence of video games.
3 very different stories, but all connected in a way.
That's right. And that's what we do here at Snarful Solutions Group. We try to connect the dots to help you make sense of what's happening in the world and to understand how it might impact your life. So if you have any questions about any of the topics we've covered today, please don't hesitate to reach out to us on our website. We are here to help here at Snarful. So reach out on our website if you have any more questions.
We're always here to help.
Thanks for tuning in.
See you next time.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.